Hi everyone, good morning and welcome to today's morning report with me, Rich Perry, market analyst at Handtech Markets on Tuesday the 7th of April. This is the first trading day back since the Easter break in Europe, and we've had a strong start actually. We've had a reaction certainly strongly to the upside, and it seems as though that the markets are still reacting positively to weak US data, which obviously suggests that the Fed would be sort of not under pressure to hike interest rates anytime soon. So that's been brought on the back of this weak non-farm payrolls data that we saw on Friday. Payrolls came in at 126,000, well below the 245,000 that the market had been expecting, and that had an impact on the dollar, significantly dragging this dollar index lower and well back away from the 21-day moving average again, but still, you could argue, still around about that support area. Again, I will tell you that sort of equates to, that's a key support area, sort of equates very nicely to the 1.1098 level that we had on euro dollar. So I'll take you through that euro dollar chart in a bit, but it still seems as though it's fairly choppy consolidation on the dollar rather than any move decisively away from the dollar. And in fact, I'll show you the intraday chart on the dollar index. We've seen actually this move slightly find support and now begin to move higher today. So we're starting to see the dollar regain some of this control that we had lost in the wake of that payrolls data that came on Friday, that big sharp move to the downside there on Friday. So it certainly looks as though the dollar is beginning to regain a bit of that upside, and we're seeing the gold price falling away. We're seeing the euro back under a little bit of pressure. Sterling come back after a little bit of strength early on, and even the Aussie dollar, which had been strong earlier on as well, on the back of the fact that the RBA, the Reserve Bank of Australia, kept hold on interest rates. Market had been to a certain extent expecting a rate cut, another rate cut of 25 basis points on the back of weaker commodity prices, but certainly it seems that the RBA has held fire on that, and the Aussie has been the one key Forex major today that has really been having a move against the dollar to the positive side. And I'll talk about that in my chart today in a little bit. But in the meantime, what we've got out today is we've got all this PMI data for the Eurozone. We've got the services PMIs that have been coming out this morning. Very, very slightly missing on expectations on the Eurozone services PMI and also the composite PMI. Just very slightly missing expectations there, but nothing too significant. But the main takeaway point would be that the numbers are improving or have improved from last month. 54.2 on the services PMI for the Eurozone. That's not a bad number. Actually, that's what above the 53.7 that we saw last month. At 9:30 this morning, you've got the UK PMI for the services sector. That's coming out in a few minutes. I'll take you through that as I go through the cable chart. And it is expected to come in at 57.0, so slightly higher than 56.7 that we had last month. So it seems as though this services PMI data is beginning to settle down, having just been drifting lower. It's starting to sort of settle down a bit in the last couple of months. And the US data this afternoon, we had the ISM Non-Manufacturing data already yesterday, so that's already into the market. And the only real bit of data that we got this afternoon is the JOLTS job openings. Now, we had that disappointing payrolls data on Friday, but the JOLTS jobs openings are still expected to come higher. They're still expected to come in at 5.01 million jobs. So that is a continued improvement in that labour market metric there. That's at 3 o'clock this afternoon UK time. So that takes me to my chart of the day, which is the Aussie dollar. Now, as I said, the Reserve Bank of Australia kept hold on their rates, and that's created a surprise. That was a bit of a surprise, and we had a jump in the Aussie. But you would certainly argue that, at best, the Aussie dollar is in this big, long consolidation over the past few months. And if you actually look at it, we're just drifting lower to lower lows and not really being able to make gains. And look at the moving averages all falling away. The momentum indicators are all in broadly negative configuration. You'd say that arguably there's a bit of a buy signal that you're seeing on the stochastics now that might see a bit of a rebound, but I'd still be looking at using any rallies as a chance to sell on the Aussie, as I think the Aussie is going lower on a longer term basis. You can see there across the last few months there's no real sign of a recovery on the Aussie, and it continues to put pressure on the lows. But this is the move that we've had today, the sharp move to the upside, and it's just consolidating at the moment, but nothing too significant in terms of gains. And what I'd be looking at is this 77.40 level, which has been such a key pivot level over the past couple of months, 3 months. 77.40 is this big overhead pivot level resistance now, so I think anything back towards there may well be seen as an opportunity to take on some short positions. You've got a further slightly higher resistance around 78 figure, which is a bit of a more of a shorter term pivot level resistance there, but certainly I think 77.40 is the big level. This green line here that we have on the chart, that's the big level that I'd be looking towards taking advantage of if you got it, and already it's starting to sort of consolidate around that 77 big figure mark. So it'll be interesting to see if you see a drift back towards 77.40, but I would be seeing that as probably a chance to sell if you get it. So that in terms of support, well, you sort of zoom in here and you can see there is a minor pivot level support around that 76. It sort of comes out at 76.05, but 76 figure you could arguably call it, minor support level area there, 76 figure area. So if you saw it trading back below that, you'd obviously be putting pressure straight away on that 75 level, and then that ultimate low at 75.30. So ultimately I still think that the Aussie is going to be retracing to test these levels. Near term you've got the moving averages starting to pick up slightly, and the momentum indicators just improving in a marginal way, but you wouldn't be backing any real rally, I don't think, on this Aussie, especially in light of the fact that we've got that 77.40 key overhead resistance pivot level still to negotiate. So I wish you good luck in your trading on the Aussie today, and I will speak to you later. Thank you.